What an exciting day. Welcome to the show. The timing of this show is perfect right now because we just had Twitter, the second biggest tech IPO in history here in the U.S., the biggest one and the most buzzed about one of the year, and since Facebook last year just started trading. It opened at $45.10. It's trading up 90%, right near $50 a share. It priced at 26. That means Twitter could be company number 7 in 2013 to double on its first day of trading. This is astonishing. We're going to dive into it with two guests right now that I'm very excited to talk to. We have Ari Zoldan. You are Quantum Network's CEO, so you provide to the mobile industry. You're tapped in.
That's correct.
To that sector. We can talk about mobile in a second and where Twitter's going with that. And Hillary Kramer, the Chief Investment Officer as well as the President of ANG Capital. You talk about momentum stocks. You talk about what you call event-driven investing, which I didn't even consider until we started speaking. So these are going to be two interesting perspectives that we're going to get. First of all, we'll start with the breaking news. I mean, the stock's almost at $50. What do you make of this huge pop at the open?
I mean, I think this is, Lauren, I think this is very dangerous, actually. It was priced at $26. It's doubled already. And I think it's trading out right now at, what is it, at 46?
It's at $49.70.
It's very, I think that's
dangerous.
A very dangerous
stock. Do you agree?
Okay. Even though ordinarily valuation doesn't really matter to me, it's obviously the potential for growth and earnings and profitability and, of course, international expansion. The problem here, as Ari said, this is just too expensive at $50 a share.
But this is what, and I don't mean to interrupt you, this is what Wall Street and the New York Stock Exchange and the Goldman Sachs guys and the brokers and the traders, everyone was worried about this. They didn't want the stock to be too expensive to push people away.
They don't want the stock to be too expensive for another reason also, because they can open themselves up. They're very vulnerable to lawsuits when something like this happens because the stock could come right back down. And so Goldman Sachs and all the investment banks, they're very mindful. They have excellent compliance today, and that's exactly the right point. Nobody wants to see a stock double like this. Now, it's one thing if a stock goes public and it's Potbelly or Noodles and it has
which have doubled this year in their trading debuts.
They're not offering $1.4 billion of shares, so there's a lot more demand out there, and there's specific funds.
I believe they offered nearly $2 billion in the end, actually, of shares.
But in terms of valuation, this is a pretty large offering in comparison to small IPOs where a valuation might be $700 million instead of $14 billion at the price of 26.
Right.
So here you have a lot of investors who are jumping in. The investors who have been given an allotment could very well be selling, but the excitement is there because Twitter on the macro level is very, very important, because that's what we're all saying. Hey, why is this such a big deal? Why is Twitter any different from Facebook? Why is Twitter any different from Google?
So let me comment, if it's okay, Lauren, let me just comment on that. So Twitter is very different than Facebook for a couple of different reasons. Obviously, Twitter has been extremely focused on 140 characters. The messaging is very direct, and it's a messaging platform, and that's all it is.
It's a cultural phenomenon. It has changed the way we talk about events.
Right, and there's also the whole celebrity phenomenon, right? They got Ashton Kutcher on board, and I think that really springboarded and put Twitter in the limelight.
The president announced his victory.
Yeah, it's pretty amazing off of Twitter.
But it doesn't make money.
That's the issue. It's lost $200 million over the past 2 years. Granted, yes, there's 238 million people, and they're relatively active users on Twitter. But fundamentally, that's dangerous. What's happening at $50 a stock, at $50 a share? The company has not made money. There's no revenue.
Sales were $140 million for the last quarter. That is nothing when you're talking about a valuation, that's in the multiple.
So
of
are
tens
the
of billions
people
of
who are
dollars.
buying Twitter at $48? Are they saying we think that we have patience? We know Twitter has not made money. We like the executives and the leadership. We like where the company is going. We see potential. Maybe we'll go closer to 1.2 billion users like Facebook. And mobile advertising, we're just scratching the surface.
We are. We're just scratching the surface with that.
Because that's the moneymaker for Twitter. Because they don't sell a product. They don't sell a tablet. They don't sell a phone.
But you're still in without a really proven business model. To price out each Twitter user, which the markets have done at $78 per user. I mean, That's
$78
$78
per
per user. That's what it breaks down to. You have
and it's
1.8
actually
billion.
only bringing in about $4 per user. So you have this huge dichotomy. There's this like incredible schism. So the
profit is $4 per user, and what's
it's priced at $78. The market
versus what
price,
they're really
$78.
realizing per user. Now $4 per user is that's pretty good considering this is a company that was founded in 2006 and it's still in its infancy relatively. But how are they going to get up there to $75 to $80? It's going to be almost impossible.
So the answer to that, at least taking the other side, is that with the 238 million active users right now, from last year it's up 40%. So again, it's not Facebook, it's not a billion users, it's a stepchild to Facebook, but it's also very different. People compare Facebook and Twitter, and it's not. They're completely different platforms, different applications, and a different user base as well.
If we look back at Facebook, it priced at 38, it opened at 42, it closed at 38.23, and then it went for the next couple of days
same thing
and
with
months.
Twitter.
But this
Same thing
year,
with Twitter.
it's up more than 80%. So Facebook investors,
Facebook is profitable, right? Facebook is profitable.
Facebook was
made
profitable
money
when they went
launched
public.
IPO,
Okay,
so it's a different story.
Now let's look at some of the statistics. It's very important for investors, even though you're not supposed to invest looking in the rearview mirror. Here you want to. Internet IPOs since 2011.
You have to because you can't get it at 26.
Exactly. So internet IPOs since 2011. 75% of those internet IPOs 3 months later were trading below the offering price. In this case, the offering price is $26. Where are we now? We're at
$47.43.
Okay, so if you're an investor and you love Twitter and you see the future and potential, pick your points, pick your spots. Be patient and wait. Remember, what happens is that a lot of venture capital funds have invested in Twitter and brought it to life. Those venture capital funds can sell their shares on February 15th and on May 15th. At those times, the stock is going to pull back. That is an opportunity for investors to jump into Twitter and to buy.
So the average investor might want to wait until February or later for the lockup periods to expire, for all those extra shares to come to the market when they can find Twitter at a price
and we also want to go through
$47.
Lauren. We also want to go through a few more quarters of earnings to see how Twitter is really growing, because there could be competitors that could eat their lunch, or it could very well be that Twitter continues to gain in momentum. The key here is what Ari said, and again, I go back to it, and that's why you hung on to it. It's the bigger picture about Twitter that matters. What is different, and that Twitter has this interactivity, and that Twitter's so instantaneous.
I think they've also kept to their brand. It's 140 characters. It's never going to be 250 characters. It's never going to be really this huge. They've really kept to their message. It's very focused. It's very specific.
And it could be here to stay. Absolutely.
And that's it, though, And it's going to be a commodity. I think what's going to happen is that Twitter's going to focus on a lot of B2B business, probably emergency management, because it's an amazing way to be able to get a message out. So it could be the EMS.
I go to Twitter when I need news.
Okay, and it's not
laugh
Facebook.
At myself every time, but I have my Twitter account set up in such a way where I'm plugged into the right people. And I have to add, because there's a poll, a CNBC Associated Press poll a couple of days ago, that said 47% of people that they asked don't think Twitter is a good investment because most of them don't get it. I set up my Twitter account so I understand it. But I'm not the average person. I'm a little bit more plugged in because of my job. Does the average person understand Twitter?
I don't think the average person does yet. I don't think the average, especially small businesses also, they don't understand the value of social media. It's really for, at least specifically business, it's a branding tool. It's a marketing tool, and it's a very powerful one if you know how to do it. Listen, if I go outside and I
get you
what's that?
We're still on the ground floor.
Oh yeah, we haven't even scratched. I think what you said, we haven't scratched the surface yet, and there's so much momentum ahead of us. But at $50 a share, that's quite scary.
Okay. Yeah, I think the market's getting scared. Let's see how the market's reaction. Can we put up the big board? I don't even know today. We did have a lot of economic data. And, okay, we've been all over the map. Green and then red, down 36 points, at least for the Dow Industrials. Not too much movement there. And then, as we watch this company and it grows inside, it eventually gets added to the S&P 500, which is a very widely held index. And then we all start to own Twitter, and we don't even know we do because some mutual funds or pensions or whatever own shares in it.
Right, and they will start to get in after those few quarters. Remember I said, think about watching and waiting for profitability. So many mutual funds have in their mandate that they have to wait, especially the large ones, at least 3 quarters, 4 quarters, a year out. And that's why we've seen Facebook, went up, came down, and now we're seeing a real fundamental build in the ownership structure as some of the original investors have sold out of their Facebook, and now you have real solid investors who are in there for the long term. But it's very interesting on Twitter. I want to recall what happened. Carl Icahn, he had a conversation with Tim Cook, the CEO of Apple, and he talked about doing a buyback and told Tim Cook that he had bought some shares in Apple. Carl Icahn used the powerful tool of Twitter, tweeted that out there that he had had a conversation with Tim Cook and he was going to have lunch with Tim Cook and he asked him about buying back shares of Apple stock. And Apple stock took off, and it made Carl Icahn an instant pop star. Carl Icahn has figured out and learned how to use the tool. He is brilliant. He's smart. That's why he's been on Wall Street for decades and keeps making it. Once everyone else figures it out, Twitter will start to continue to grow, and yet will stay true to its 140 characters. So think about the power.
But also for communication. You know, it used to be people would write very formal emails. Today, it seems to be acceptable not only to text and to BBM, but to actually send a tweet as a form of messaging. So, actually, unfortunately, this is becoming, I think, a very standard, normal form of communication. So, and I'm a huge advocate of social media. Just, you know, when I get messages from people, and they're supposed to be formal messages, and I get, direct messages from Twitter, I sort of feel a little bit like, hey, it's not professional.
I think people figure out how different social media works for them. I'm assuming you both have Facebook, Twitter, Instagram accounts. Is there something I'm missing here? Is there like Snapchat? Is there another account that we should have?
I mean,
are those there are a lot of private companies, small apps that I see a lot of the under 30-year-old set using.
And take a look at Keek. K-E-E-K,
so many.
And there's Vine. There's a lot of new social networks. There's a lot of new social networks popping up, but Twitter has done a great job of staying to their core message of that. And I keep coming back to the 140. You know, again, it's never going to be 1,000. You know, it's never going to be 1,000 characters. Yeah, and I just want to mention, I'm sorry, I'm just very excited about this. It's an amazing, it's an amazing day today. Twitter's board and the executives are also very, very seasoned. You know, if you compare it to Facebook, which I said before, people shouldn't. You have Mark Zuckerberg. It's an under 30-year-old.
Yeah, they're not wearing hoodies at Twitter down at the New York Stock Exchange today.
Right. Yeah. They're professionals and they have suits and they're granted they're young, they're tech guys, but they have history.
Yeah. So you believe in the leadership of the company, which is a big part.
I really do, and it's all about the leadership. You know, the product could be decent, but if you have great leadership and good marketing and you stay to your core.
And I believe in the viral nature of it, and it's taken the whole concept of the internet and social media to the next level.
Okay. Thank you so much, Hillary Kramer, the president and CIO of A&G Capital, and Ari Golden, the CEO of Quantum Networks. Thank you so much.